Welcome to the Roy Morgan Weekly Update. The third week of the Albanese ALP government was dominated by two things: the continuing gas, energy or electricity crisis impacting the east coast of Australia, and the Reserve Bank's decision to increase interest rates for the second month in a row. And these crises are having an impact. The latest Roy Morgan poll shows support for the ALP has dropped 1% in a week. The ALP at 54% now leads the LNP, the Liberal National Party, on 46% on a two-party preferred basis. Government confidence is down 1.5 points to 107, dropping for a second straight week. That means 43% of Australians say the country's going in the right direction and only 36% say it's going in the wrong direction. So this is still a lot better than it was pre the election. But consumer confidence is the really big concern this week. The ANZ Roy Morgan Consumer Confidence Rating plunged 6.6 points to 80.4, way below that neutral 100. If we look then at the longer term trend for consumer confidence, we see the drop to only 80.4 points this week means the index is at its lowest mark since the very start of COVID-19 pandemic in April 2020. And you'll see there for a week, consumer confidence went down to 65.3. This figure of 80.4 for consumer confidence is also well below the lowest level of consumer confidence we experienced during the global financial crisis in 2008. So this is low. Clearly, the biggest reason for the plunge in consumer confidence is the increase in interest rates by the Reserve Bank last week. And for many, it was a larger than expected increase in those interest rates. So the increase of 0.5% to 0.85% means interest rates are now higher than they were during the pandemic and at their highest since October 2019. On a much longer term basis, interest rates are still near record lows, despite these two increases over the last 2 months. But the Reserve Bank has warned that they're set to increase interest rates on several more occasions this year. And we've just heard today the Fair Work Commission decided to increase the national minimum wage by 5.2% to $21.38 per hour. That increase is slightly above the reported inflation figure for the year to March 2022. And this will clearly factor into the Reserve Bank's interest rate deliberations. We at Roy Morgan continue to keep a close eye on those people who are most impacted by interest rates, and that's those people who've got a mortgage. So consumer confidence has dropped by 24.5 points since late April for these people to only 76.9. And in the last week for this group, consumer confidence dropped 7.8 points. So mortgage holders, if you look at this chart, have moved from the most confident to the least confident people. Consumer confidence has also dropped for homeowners, those people who've fully paid off their home, by 16.8 points since late April to 81.2, and consumer confidence for people renting has also dropped by 7.1 points to 82.6. So across the board, we've seen this decrease in confidence, and further interest increases will clearly have an even more negative impact for consumer confidence in the months ahead. We now look at unemployment. The latest Roy Morgan unemployment figures for May were released last week, showing a big fall in unemployment, down 1.6 points to 8.1. Now, before we get too excited, remember what happened in May, an election. The big drop in unemployment came due to a surge in part-time employment during May, as many people got jobs actually working on the election, whether they were working for the Australian Electoral Commission or for political parties or some other organisation doing things that related specifically to the election. And the one-off nature of the federal election means that this drop in unemployment is really unlikely to be sustained in future weeks and months. So looking forward, the gas, the energy or electricity crisis is probably set to dominate the discussion again next week, as will be concerns about inflation and rising interest rates causing an economic slowdown. Clearly, all these factors are closely connected to each other. Thank you for listening. I look forward to joining you next week when we'll have the latest data on consumer confidence and we'll be looking more deeply at mortgage stress. Thank you.